Hi, everyone. Welcome to Go for Launch. My name is Allison. I'm a lawyer and I own AMC Legal. And I am so pleased to have Jessa Varghese on from the Bookkeeping Doctor. She's our first guest speaker for Go for Launch. Yay. Thank you,
Yay.
Jessa. So Jessa, would you like to give us your introduction, your bio, and some information about you?
Sure. So I am the CEO, founder of Bookkeeping Doctor. A little bit about my background. After 12 years of corporate life of working in accounting and finance, I started this business, Bookkeeping Doctor, about 7 years ago. And what we do is we basically provide services from bookkeeping to advisory level services and we just meet our clients where they are. So all of our clients are business owners and that have service-based businesses or in the healthcare industry. And what we like to do is just help give them like that peace of mind of not having to handle all of the finances, because a lot of us do not have that background. So it can get very stressful to handle that. And so to be able to take that burden off and give them peace of mind that their books are being done accurately, organized well, and we provide them their monthly statements so that they have their numbers to look at and be able to make decisions off of that and know that they can grow their business successfully because of the help and service that we can provide.
I know personally, when I started my business, I actually said I never wanted to own my own business. And one of them was because it was so intimidating with the accounting and also the tax work that needed to be done as
Yes.
well. So yeah, having a professional do it for you, taking it off your hands. But of course, you have to understand what's going on so that you can
Yes,
still run your business. So
exactly.
what are we going to talk about today?
So today I'd like to talk about knowing the story behind your numbers. So just like I mentioned, we provide our statements to our clients. And so some of them are like, hey, I just need the statements and, I can read it, I can handle it on my own. And others need a little bit of help. So we also jump on monthly calls with them or whenever they like to say like, hey, here's what it's saying, your numbers, and this is the story behind it. And here's we can put budgets and forecasts together for them as well, like understand their targets and goals and where they like to take their business. So we can like look at where they are now and then help create a forecast or budget to get them to where they want to be. What do they need to do? Action steps, right? So the main thing that we need in order to do that is the financial statements, and then understanding the story behind those financial statements, because they tell you how your business is performing. That's what I want to help or talk about today, and understanding like three big ones that I think are important to utilize on a regular basis.
Okay, great. Wow. That's like financial coaching, but with all of the numbers worked in. And it's so important to know the numbers that you have, because a lot of people, and I was guilty of this too. I got my balance sheet, got my profit and loss, taxes were filed, I'm done, and I just moved on with my business. But you really have to go in and understand what's
Yeah.
going on. And I love that you coach people through how to use that to reach your financial goals. So that's amazing.
Exactly. I mean, so, and we'll talk about this later, but it's so important. I'll give you some stats later on about like how reliant a successful business is on the survival of it, when you are the person that knows your numbers versus the person that doesn't look at these at all. The survival rate is pretty big.
Bleak.
Yeah.
Okay, great.
So I have a little slideshow here that I think I'm going to share my screen. All right. So like I mentioned, this is what we're going to talk about today. So what's the story behind your numbers? We all run businesses and to really understand. So sometimes as business owners, you're in the business, you're doing the sales, you're doing the operations part of it. And in your mind, you're doing amazing. But the true way to understand the performance and how your business is running is to look at the numbers. And I'll show you some numbers and financial statements that are important to reference in order to understand that.
Okay, I'm excited.
Let me see here. Okay. Am I here? Okay. So before I begin and talk about these financial statements that I keep talking about and referencing, I'm going to put a warning out there. I'll give, and I'm going to use kind of an example of a doctor's office. So I'm the bookkeeping doctor, right? We're the bookkeeping doctor. So we'll use an example of a doctor's office. So anytime we go to a doctor's office, it's for an annual checkup or there's something wrong with us, right? So what happens when we go? What is the doctor going to say? When we're like, hey, this is wrong with us, the doctor will most likely say, oh, let's do some blood work, or let's do, he's going to run some tests before he just says what's wrong with you. He's not going to make that conclusion until he runs a blood test, or maybe it's an MRI, X-ray, maybe it's all of them. It just depends on what your situation is, right? So that's why it's really important in the same situation here. And say that it's blood work, right, that you need to get done. The doctor's going to say, you're going to have to do some things before you can actually get that blood work drawn. It's going to be that, hey, you need a fast for 12 hours or something like that. So there's like pre-work that needs to be done before you can get the blood drawn and get the results, right? Mm-hmm. So in the same case, if we bring it back to financial statements in our business world, we need to have clean, accurate bookkeeping done before we can even look at these statements.
Yeah, you want to make sure you're working off the right information.
Exactly. So, I mean, there's no point in looking those numbers if they're all wrong and not, you have to make sure your accounts are reconciled, and there's all this work that needs to be done. All of the information has been captured, that you're not missing anything, so that when you look at these reports, you're looking at accurate details. So that's what I wanted to put as a disclaimer here before we talk about the financial statements. Okay. All right. So the 3 financial statements, I call it the big 3, are the ones that you need to, on a regular, at a minimum, be looking at, I would say, monthly. To be that successful business owner, this is where you need to look at these on a regular. So it's the income statement, balance sheet, and cash flow statement. If you're working off of a financial system like the software like QuickBooks Online, all of these things can be run in there. So this is like a very minimum. They have that as well. So it's easy to obtain and run. You don't have to create these on your own if you're working with the software. Just wanted to put that out there. All right. So income statement. I think this is the one that all business owners know. So I don't, want to talk about it too much, but basically it's your revenues less your cost of goods sold minus your expenses, and then the net profit. That's the number that everybody wants to look at. And this is what's going to let you know whether you have a loss in your business or a profit.
Yeah, I'm looking at that one a lot.
Yeah.
See, it's good to get a little snapshot of how you're doing. You're like, oh, okay, this is good. Or, okay, we need more work to do.
Yeah. Yep. So I want to give an example. This is like a cleaning company ABC. And this is the year 2029. And they ran their income statement. They got they're such a good company. They got all their bookkeeping done. Everything is reconciled. All their transactions are in. They reviewed it. Nothing is put in the wrong place. All the transactions are coded correctly. And so now they can run their statement. And so here they are, looking at their income statement. Here's how they are doing in 2029. They have sales of 120,000, cost of goods sold of 15, which means that gross profit is 105. So why do we want to look at gross profit and not just go straight down to net profit? The reason is because of this. This is looking at gross profit. You're looking at your revenue. So in the case of this cleaning company, this is the 120,000 is what they made in like cleaning, right? The cleaning services they provide. This is what how their sales are generated. This is the line that shows that. The cost of sale is the direct expenses that were related to making that sale happen. So if this cost did not happen, we could not provide that revenue or have that revenue line.
Yeah, it's directly related to what you sold. Directly.
Yes, this is a direct cost.
There's no change in it. Got it.
Exactly. So in this case, what are items that would go in the cost of sale would be like the labor of people, the cleaning crew, and who all went to each of these houses or residents or commercial areas and, clean. This is what it cost them to be able to clean and provide that. So that makes sense. It's really important to look here because it gives you an idea of, am I pricing correctly?
Oh, okay. Okay.
This is the first line of letting you know, are you pricing correctly? Because if this number is negative, this
Mm.
105 is actually a negative number, you already know something is going wrong.
Yeah. Like I see this for my business. I have, like I incorporate someone, but then there's a filing fee that goes right away, cost of goods sold. That's not something I can avoid. So
Right.
that's my cost. So yeah, I guess if I wasn't charging enough to cover all the expenses that, yeah, definitely have,
Yeah,
boy, I can't imagine, but I guess that happens.
it can happen. Yeah.
Yeah.
Like if you
We
think
get, we,
about it,
a lot of business owners are too, they want to be too kind or, but it really
mhm.
is, you're in business to make a profit. So you have to be able
Yeah,
to.
you want to give those discounts, which is great, like once in a while to do that, but how often are you giving it? And what is that meaning at the end of the day? You don't want this to still be a profitable number, but your operating expenses below are, so much higher. Sorry,
Mhm.
so much higher, and then you can't even cover your expenses after
You're
because
working
you're
for
not
free.
making a gross profit. Yeah, exactly.
Yeah.
So this
Yeah.
number is super important. A lot of people will look past that and go straight down to the net profit, but you want to stop here first.
Okay.
This is your first line of understanding if there's an issue. All right, so far looks okay. I mean, they're running a profit right now as of the cleaning company ABC. And now we're going to look at our operating expenses. There's also other payroll. So they also have a secretary in the office and a marketing person and so many other things that they're doing that require an office manager, all sorts of things that require extra payroll. So there's that, utilities and rent. They have a big office that they are renting right now, and depreciation for other equipment that they take with them to go cleaning. All of that is in here. So after that, their operating expenses are about 76,000. Interest and taxes less that. Now we're showing a loss of $1,000. So actually, after doing all of that work and making decent money, they are at a loss at the end of the day. So
Yeah,
they,
$120,000 in revenue, but losing money.
yeah, it's not. It's all that energy is, giving you a loss at the end of the day. So cleaning company ABC does not like this. They are not happy and they want to make a change. And so they are looking at each of these line items, looking at so they're looking into utilities, looking into all the transactions under depreciation and rent and utilities, and thinking about what can they do, where can they make the biggest change to see this at a profit and not a loss.
Mhm.
So it's either you got to increase your prices or you've got to figure out where the expenses can decrease,
Or some
right?
of both. Some of both.
Or a mix of both.
Yeah.
Exactly. Exactly. So this is what they did. So they're planning ahead for next year. They looked at actuals, what's happening right now, and what are we going to do to change it for next year? And these are the kind of things that will help our clients with if it's hard for them to do, we'll help them look into all of these things and really dig in and see like, okay, what's your target? This is the part of it. What's your target? How do we get there? What are the things that we can move and which levers can we pull
Hmm.
to make this the profit you want it to be? So so they did all the things, they looked at it and made some changes and implemented it next year into 2030. And here's how they did. Here's the results of it. They have revenue now of 150,000. I'll talk about how they get there.
Okay.
And then their cost of sale went up as well, 25,000. So these are actually, it's still a profit. They're actually up gross profit 20,000. But if you notice, their costs went up, their cost of sale went up, but also more than their costs they were able to increase there. So they did a little bit of price increase here to help bring that number up. And that, oops, all right. And then also they looked into their payroll. So they knew that, hey, we need our office manager. We need our, um, like the people in the office, like the marketing person and all the people that they have there, we're not going to let anybody go. That's not going to be something we do. So that stayed the same. Utilities actually went down. So if you notice, the rent and utilities number both decreased by a total of 16,000. What they did is they realized that we have this huge office that nobody's in. We don't even need this much space. So they were able to find a cheaper office space and to save themselves $16,000.
That's really great. Yeah, one of the biggest expenses is always, I tell clients, it's employees and it's your rent.
Yeah.
Those are the two biggest expenses usually. Or they could have subleased or got some other people in there to help pay toward rent or whatever you need to do to get that down.
Yes, exactly. Yeah. Subleasing is a great other solution, right? So that you can still have the space, but you don't have to move everything and go through all of that hassle, and you can save yourself some money at the same time. That's a really great solution too. Maybe this company should have thought of that. But they decided to move. So they have a smaller space, so that saved them a good chunk of change. And they also decided to invest a little bit more. They actually decided to increase expenses in their marketing. They realized they weren't doing anything. It was all word of mouth, which was great, but putting some more Facebook ads or advertising more out there. They actually joined some networking groups and got the word out there about them, and invested $5,000 that year to increase that sales. So that's part of the reason also that you see the increase in sales here, because they were able to get more clients. Obviously, that meant that they had to hire more people on, and that's where the cost of sale came in as well.
Got it.
Increase. Sorry, I keep doing that. So then, bottom line, they were able to, on the operating expense side, save another $16,000. So a total of $36,000 was saved, and negative $1,000 to a positive 35,000 just by looking at the story behind their numbers. What was it saying, and what can we do differently that we're capable of doing, right? That's it within our like something that we can actually do in the short
You
term,
actually
because
have
it's like
control.
in the next year. Yeah,
you can actually do it. There is some control. Like if I assume you have businesses who are like, we're making a lot of money, but we're not making a profit. What's going on? Where's all the money going? We have to sit down and look at this. Or even
exactly. So
if you're making a profit, you still need to sit down and look at this, because you can be making a much bigger profit and growing your business.
exactly. And it's all sorts of decisions that a business, and depending on the service that you have. Recently, I helped one of my clients with making a decision on whether to move from like hourly to salary. Like what would be for their employees? They had about 10. It's like, okay, so if we move them all to salary, what does that mean? If they go to salary, that means they could work more hours. That could increase sales, but then also that would mean more costs from employer cost, tax, all of that fun stuff. So it's like, but you have to look at and it turned out that it wasn't beneficial for them.
Okay.
So you just have to but looking at the numbers is where we started. Looking at where are we starting? What does that break down to? And is that a decision that's best? And it turned out it wasn't. So that's great. At least you looked at that, and
Especially a big decision like that, because it's not like, oh, am I going to market here? And if it doesn't work, I'm going to stop. I'm changing all employees over. And you can't really, that's not an easy thing to undo.
That's not an easy.
Yeah.
It's not an easy thing to do. And then if you try to undo that, I mean,
oh yeah,
there's morale
you
and all
have
these other things
employees anymore.
Yes, exactly. So yes, it all starts with looking at your numbers. So this is a profit and loss, or the income statement. They're both the same. I think I used both here, but I hope everybody understands. So it's the income statement. It's interchangeable with profit and loss statement as well.
Yeah, I think my QuickBooks calls it the profit and loss, the P&L. Okay.
It does.
Okay.
So, but same thing. They're the same report.
Mm-hmm.
All right. So that's what cleaning company ABC did. So I know this is the one that a lot of business owners look at and they stop there. They think like, oh my gosh, I'm doing amazing. I'm making $35,000 in profit every year, 28% profit. That's amazing. That's it. I'm done. But it doesn't stop there. It is so important for you to look past that and look at other things. So, just like if we go back to the doctor example, I'm just thinking like your blood work might be awesome, right? Everything looks like the results of your blood work came out. Everything is on the positive side. You're good. but then your MRI says that you have a broken. So, or whatever, your x-rays, right? Like you have a broken bone. So obviously there's an issue, right? Or maybe that's like not the best example, but at the same time, like looking at another test can give you a different answer, that there is something you need to be aware of and you need to look at and not lose focus of, because and this is where, and I'll go to the next one. So this is where I'm going to introduce also two other statements, the balance sheet and the cash flow statement.
Okay.
So here's the balance sheet, and it is basically a formula that says everything that you own minus the things that you owe is going to be your net worth or your equity. So assets minus your liabilities is your equity. All right, ready. And it's called a balance sheet because if you look at a balance sheet, you'll notice that on the bottom there, the total assets must equal the addition of liabilities and equities. So this is why it's a balance sheet. It's probably the easiest way to remember that one. But okay, this is a lot of numbers, a lot of things going on here, and people are like, okay, I don't even want to look at it. I don't even know what the purpose of it is. But it's so important because this is actually, if you're ever thinking about eventually selling your business, investors are going to go straight here. This is the first statement that a lot of investors are going to look into. Profit and loss is great because that gives you a time view of like a certain time.
Like a snapshot.
A snapshot of that time. So I would be like I showed you before, it was all of 1 year. Or you can do just 1 month, or 3 months, a quarter. Whereas the balance sheet is going to show you everything from the beginning to that period of time.
Oh, wow. Okay.
So from the
There's no
beginning of the
hiding
conception of the business, to right now. So there's nothing. The balance as of this day, whatever day you choose, from the beginning to that moment is what it is. So it's that balance as of that moment. So it really captures everything in your business. And that's why a lot of business owners will go here, but it also tell them like a lot of different stories. It tells you how much, so like I mentioned, assets tell you how much you own. So this is where you're going to see, like if you have a car that is under your company name, that's going to be under here. If you're a trucking company, all the trucks and the assets of all the trucks are going to be here. So what are your fixed assets? You own a building, that's going to be on here. So it lets an investor know, like, if I had to sell this business in a second, how much is really liquid and how much is not, so that's like one view. How much do you have in accounts receivable? That's really important. So if you think about, if you had $22,000 for a cleaning company receivable, that means that you have a lot of people that owe you money still, right? And it's harder to collect that money the longer you wait. So I usually say that 90 days out, if you're still waiting for people to pay you, the likelihood, the percentage goes down of the fact that the reality of you getting that paid. So you want to look at this accounts receivable number, for example, regularly, to see, okay, who still owes me? And you want to get that in sooner than later. So that's why this was going to be very important. It's not going to show on your P&L. It's going to show here on your assets. It also lets you know how much do you have in your different bank accounts. Am I sitting in a good position? That way, your fixed assets on the bottom here. And so that's your total assets section. Liabilities, on the other hand, is also very important because it might have been that you needed to increase the credit cards that you're using, and you had to take loans out. You have an SBA loan on here. All of those things are not going to show on your P&L. So if you're sitting very heavy weighted in liabilities, that's really scary for a company. You might show $35,000 in profit, like I mentioned, that's what the P&L was showing, or the income statement. But that might not be enough profit to take care of how much loans are getting paid on a monthly basis. So your bank account might go negative because the money coming in is not as much as the money that needs to go out to pay all these liabilities that your business has.
Yeah. Okay.
So another reason, again, this won't show up on your P&L. So you want to be able to look at that. So this is why I always tell my business owners, take a look at this. And I always look at this as almost the first thing I do to get the true picture of the health of a business. You can tell right by looking at this balance sheet. That makes, do you have any questions from that?
Well, just that is definitely something you have to look into. I don't have loans for the business, so I always just look at the P&L. I never really pay attention to the balance sheet, so I'm definitely going to be looking at that more often.
Yeah, it's really interesting what you can find on there too. And it's a good way to make sure that you're staying healthy, that your business is sitting in a healthy position. So if you ever wanted to sell it, investors would be pretty like excited to jump on it and want to buy it too. All
We always
right.
have to have that end goal in mind. You know, where's the business going?
You never know. Yep, exactly. Exactly. So the next one is the third big three statement I say is the cash flow statement. And the reason I want to make sure that you look at this as well. So it actually captures all the cash that goes in and out of your business from three different views. What money went in and out from the operational view, plus the investments, and then the financing part. So there's three different categories that they'll put the money going in and out of your business. And that's what gives your end balance. I think this is pretty interesting because, and this is the stats that I was going to tell you about, and this is a few years back, and I know this number has actually increased, but so 50% of businesses within the first 5 years of starting fail.
Yeah.
And of those 50% of business owners that didn't make it, 80% of the time, the reason why they didn't make it is because they didn't truly understand their cash flow. They didn't have a good understanding of it. What was really happening with their business and their cash flow.
So give me an idea of like what would be on the cash flow statement, like for the ABC cleaning company. Like if you do you look at this like monthly? Is this a monthly snapshot?
You should. This should be one of the three that you look at on a monthly basis.
Okay.
So I'll give an example. I think we can use this also for them. So operations would be, okay, this would take the P&L and bring in the net income here. So this is not the same number that you saw up there, but same thing.
Okay.
So 79,000 is what the net income, it brings it over here, but then it takes out things that weren't like cash related that you see on the P&L. Again, a reason why don't only look at the P&L. The P&L will have non-cash related transactions in it, such as depreciation. So you bought a truck, you depreciate it over time. You don't just expense the whole truck in that month. Or in the case of the cleaning company, you bought a big shop vac thing like that you need to take with you, or you have all this equipment, right, that they take with them. So that would get depreciated, but it's not actually cash going out every year. It was already spent years ago. And so you need to adjust for that here.
It's
so
kind of like it's there for tax reasons, but maybe not reality and what you want to be knowing about. Okay.
Yep. So, and then also they bought some inventory, and then the accounts receivable. It's like, yeah, you claim, you showed that you got that sale on the P&L, but technically you haven't got the cash in for it. So that's where the accounts receivable need to be adjusted. So actually, after all of those adjustments related to operations, it was 71,000 in money. It was actually a positive number that came in. So it makes a bunch of adjustments like that related to different things. These are things that you wouldn't see. Also investing. So say like, hey, I made money and now I want to invest more into the business. I need to buy a few more vacuum cleaners. I need to buy a few more, whatever. So you made more investments into the business. And so that would be additional cash that went out. Or, hey, I bought those vacuum cleaners, but I sold a bunch of them. So here's the net of those investing. I don't know, I did quotes because it actually happened. The investing related activities that happen.
So investing it back into the business, the profits back into the business. Okay. Because it's not really a loss. You spent the money, but it's really a gain for the business. Okay.
exactly. You're hoping for a long-term gain for your, or
Right.
short-term, hopefully, for this investing activity happening. And in the case of this company, so say it was the vacuum cleaners, obviously, I don't know how many vacuum cleaners they'd buy for $12,000, but still say it was that, they at least were smart enough to say, like, we have some old ones that we could sell and people would still
Hmm.
want them. So they were able to offset some of that. So that was really
Okay.
smart on their part. And then uh, loans that they were wanting to pay, right? And then that's money that's going to go out that you're not going to see again on the P&L. So net, at the end of the day, it wasn't $79,000 that you saw on the P&L that you made, cash that you would see in your bank account. After all of the other non-P&L related activities that happened, it's actually 63,500.
So this is a much more realistic snapshot of what you have
The
in the
cash
business and
going
what
in and out.
happened that month. Okay.
Yep. A lot of people look at the P&L and be like, I'm so profitable. I don't understand why I don't have enough
Why am
money
I
in my
broke?
account.
Right.
Yes, I don't know why I'm barely surviving every month. Take a look at your cash flow statement. It will tell you
Okay.
the true story of how your cash is being spent. There's a lot of non-P&L related activities that happen, and that will give you the true understanding.
I have to say, I have had that issue. I have talked to accountants about it, and this is amazing. I'm going to go and run these in QuickBooks this afternoon and take a look. Of course,
I
if I have
know.
everything up to date.
Now you want to see, like, what does this really mean for
I'm
my
like, I want to
business?
see now. Okay.
Yeah. Yeah. So I mean, in the beginning, when you do this, it's gonna feel like a little overwhelming. And obviously you can, call me and, ask me whatever. Um, but it's after a while and you're looking, and this is why I say look at it regularly, it'll be like so easy for you. And
Yeah.
you'll
So
understand.
if you're in QuickBooks, I think it's you go to the top and it's reports and financial
Yes.
statements, and
Yes.
then you can run the different ones and put in,
You
you
can
can
run the
say what
different
time
versions.
frame. Yeah.
So, and the nice thing about QuickBooks is they'll actually put it into categories for you. They'll say like the top section will be your favorites. So when you find a report that you like, you can like click
Uh,
on the star, I think it is next to it, and it'll bring it up top to your favorite section. But otherwise it's put into nice categories like what reports that would show you what you own, what you owe, and like, so they'll put it into like basically balance sheet, cash flow. You'll see all of it in the different categories. And QuickBooks has lots of options for reports. So I'm telling you just three, but there's so many other versions too.
And that's why it really is when you really are getting serious about your business and growing it, you have to have QuickBooks or similar software to be doing this for you. Because to do this with
Exactly.
spreadsheets would take forever.
No. Oh, no, no, no. Yes. Yes. I mean, you have to know like the accounting behind it and what it exactly means, but it's possible though, and then once you have that bookkeeping done really nicely and accurate and it's clean and you've done all the checks, go immediately to this and see what the results are saying and look at it often because you can't make a change in a business a year later. You know what I mean? Like if you're looking at it monthly, the chances of you fixing that within the year is
More in real time
yeah,
changes. Yeah.
you
And
have
as we
that
know, the
opportunity.
economy changes, pricing changes, like you have to keep up with it.
Exactly.
Okay. I'm saying this like I do it, but I don't, and I'm going to now. But I understand the need.
It is. It's so important. Every business owner should. And so yeah, this is like a quick summary of all of it, of why it's so important, and you should care. Hopefully that made sense. It's really what helps your business survive and let you not be that percentage of the 50% that don't survive the first 5 years. You want to be that percentage that survive and thrive and do amazing, and that you have all the numbers behind it to back up and make better decisions faster also, and
Definitely.
be able to react. And I think that's it. Oh, I was
So,
mentioned,
okay.
I also wanted to just mention, like, you can use it to for if you wanted to do a SWOT analysis, right? Like these numbers help you back up those as well. So like
Mhm.
diagnosing your pains, like what are your weaknesses? Look at your numbers and see that like, okay, it's the fact that I'm not pricing high enough because my expenses are, so what I actually need to price higher. So you understand like the areas that you might be weak on. What are the opportunities? Well, opportunities that you can increase your pricing. You can work on maybe marketing and all of that, those things for this ABC company that we were just talking about. Like it's a great way to use those numbers to um, do a SWOT analysis as well. Yeah.
That's amazing. That's because I know a lot of people work with business coaches. I did as well. You do the SWOT analysis, but never did we take out our financial statements and look at them.
They'll
That's
tell you the story of what's really happening.
yes.
Exactly. Yeah.
Wow.
So that's all I think I have.
So, okay, I'm hoping everyone has their accounting up to date, at least for 2022,
Yeah.
because March 15th, we're in the middle right now and we're recording this video. March 15th was when the corporation tax returns are due. Next month, the personal taxes and the LLC tax returns are due. So you should be having this all up to date in your
Yes.
software, and just go and run these and see what it tells you. See if you need help. So do you do the analysis, or like can you take on a client who's doing their bookkeeping somewhere else or doing it on their own and help them with this analysis?
Yeah, so like I mentioned, it's like bookkeeping to advisory. The only thing we don't do is taxes. So
Okay.
we provide like the accounting, but the advisory. So if you're only looking for like, hey, I actually do it on my own, or I actually love the person that's doing my bookkeeping, but they can't help me with the advisory part or the coaching through the numbers, like understanding it and doing these analysis. We can do analysis from cost, cash analysis, or profitability, figure out if the pricing is right. Do you need to move from hourly to salary? Like all of those we can analyze from every angle. So, and then that's all you need. We're like your financial planning and analysis department as well.
That's awesome.
So that we're able to provide that service
Yeah, if
alone.
you can't do it, or if you're like me, where you're like numbers are not my thing, they're not my go-to.
Yeah.
I know they're there, I understand them enough, but not enough to do
Yeah.
this. Then
Yes.
definitely I would love to. Someone like you to work with would be amazing to help the business grow.
And we love it. I love it. This is like my joy. I get like so happy talking about it. And I love it when clients come to me and are like, we're embarrassed, but like we really need help in this. I'm like, don't be embarrassed, because this is not something that is in your wheelhouse, right? Like we're not supposed to be experts in everything. There's a reason why I have to go to a doctor, because
Exactly.
I did not get that degree and I don't know it. So I'm going to trust someone who's an expert in it to take care of it for me. And that's better than me trying to diagnose myself. So same way, I'm just so happy that when people do come and then they're in their position, so let's just clean it up and get you in a better place, and then take that pain away. Like I'm happy to do that. And it makes me feel good because they can thrive as a business owner.
That's wonderful. And I'm assuming you've helped people, like when you've done this, that you've made them more profitable or made them feel more confident in their business, or if we feel more confident in raising their prices when they need to and actually seeing what's going on.
Yeah, to confidently be able to make those decisions, because you're like, I already know what's going to happen. I already know that it's
Mm.
safe for me to do it because I already looked at all these other angles. So yes, they're able to make decisions way more confidently because of the help and support that we can provide.
Yeah, otherwise you're just kind of stabbing in the dark if you
Yeah,
don't know what's going on. And that's not good way to run
no,
a
that's
business.
not safe.
Yeah. Oh, wow. Thank you so much, Jessa. This has been amazing. If you're running a profitable business, but you want it to be more profitable, or if you're, like we talked about, I'm working and working, we're bringing in money, but we just don't have any money left,
We're
or
not seeing it.
profits, or something going on. You're not seeing it. Something is going on with your numbers, and you need to figure out what's going on. So thank you for letting us know about that. It's huge for business owners to do this.
I'm
It's maybe
happy to
not the fun.
share.
It's maybe not as fun as marketing and Canva and working on all of that, but it's so important. Like you could spend so much money on marketing, like your ABC cleaning company, they can spend a lot of money on marketing, but if they don't know what's working or what's going on with
Yeah.
their numbers, it's going to be wasted money.
Yes,
So
exactly.
important. Oh,
Yes, exactly, exactly. Thank you. I'm so honored to have been on here, and especially your first one. So thank you for
yay.
having me.
All right. Thank you, Jessa, so much. And if anyone wants to contact Jessa, her info is going to be on here, and then, on social media and everything for Go for Launch. So feel free to reach out to her. I should ask you, do you do consultations for
Yes,
people? Okay.
yes. So it'll be all on it. As far as also, you can go onto my website. There is a form that will be on the bottom, and
Okay.
just fill that out, and it will give me a little idea about your business and what you're looking for. Then we can set up a discovery call or like a consultation call right away from that as well.
That's perfect. I love that. All right. Thank you so much.
Thank you, Allison. Take care.
You too.